Hi, I'm Staci from Fun Caliber, and today we're turning our attention to the US because this video and bunting is the closest I'll get to a 4th of July celebration this year. We'll be looking at why the UK investors should invest in the US and where opportunities lie today. Despite spending a quarter of my life in the UK, I'm still born and bred American, and those roots run deep. So it's probably no surprise that I tend to lean towards US companies in my portfolio. This homegrown mentality isn't unique to myself or the US. Home bias is a behavioral trend in all investors. So before we get to the numbers, let's start with a little lesson. What is home bias? Home bias is the tendency for investors to put most of their money in companies in their own country's stock market. Ultimately, most people would rather invest in the things that they know. A study from T. Rowe Price found that retail investors in the UK hold approximately 45% of their portfolio in UK companies, but this means that investors could be missing out on a big chunk of returns, as well as not getting that all-important diversification in their portfolio. As Fiona Harris, investment specialist for the JPM US Equity Income Fund, pointed out.
We all have home country bias. We invest in what we know. And for that reason, we tend to avoid other places. That can be detrimental to our portfolios.
Overseas markets are often perceived as riskier and more difficult to access than the UK market. But by not investing in a particular country or region, such as the UK and Europe, investors can become too concentrated in the movements of domestic markets and economy.
Just look at last year, the perfect example of a storm that hit globally. Yet the US rebounded first, recovered faster, had fewer dividend cuts, and we actually had dividend increase in the market. So while the yield may be lower to what you're used to in the UK market, the benefits are so much bigger. And I think that's really important. The biggest benefit being diversification.
Americans only make up 4.25% of the global population, but as Hugh Greaves, co-manager of Premier Miton US Opportunities Fund, told me, the US is the biggest source of investment ideas in the world. The US stock market accounts for 65% of the MSCI World Index, which represents global stock markets around the globe.
And it's not just a random group of companies. I mean, these are some of the most dynamic, some of the most innovative companies in the world. And I think if UK investors are ignoring all of that, then they're ignoring an awful lot of potential opportunity that they could otherwise take part in.
Over the last 10 years, U.S. shares have led the way. The S&P 500 has returned 287% over the decade, compared to just 83% for the FTSE 100. The MSCI World Index, which I mentioned previously, has returned 230%. Bigger isn't always better, but when it comes to returns, it certainly doesn't hurt.
Everything's big in the US. Microsoft is $2 trillion. So, by some definitions, a small cap in the US is 1% of that, which is $22 billion. Which if you go to a UK-based investor and you say, look, we've got a small cap and it's $22 billion, they burst out laughing. So to think of it as large, medium, and small in the US doesn't really work.
I'm an East Coast girl myself, but Middle America is still my favorite place on earth. New York City is home to 8.2 million people, but America and its companies are so much more than New York skyscrapers or Silicon Valley.
We often say that the large cap index is the headline and the mid cap and small cap index is the heartbeat. Really, if you look at kind of the construct of the index, right, the large cap index is heavily weighted towards kind of tech, telecom, media, internet, all areas of secular growth, but not really indicative of what's happening in the overall kind of employment and economy of the US. If you look in the middle of the country, it's really driven by kind of what's happening in the cyclical sectors. It's not what's happening on the coastal markets around internet and Facebook, et cetera. So that's why we believe strongly that the mid-cap space, it really is the heartbeat of America.
One concern at the moment is, of course, inflation. U.S. inflation currently stands at 5%, and it's possible that the Fed will raise interest rates sooner rather than previously thought as a reaction. As Hugh pointed out, consumers are in a really bizarre environment where we're coming out of a recession actually wanting to spend.
And so you've got to large number of people with significant savings, a willingness to spend as they come out. And they're going to go out and spend money. They're going to spend it on holidays. They're going to spend it on stuff. They're going to spend it on going out. And that is really going to boost the economy over the next couple of years. And the companies that benefit from that won't be the tech companies. It'll be the retailers. It'll be the restaurants. It'll be the factories. Those are the types of companies that are really going to do well over the next couple of years.
We've put over $5 trillion into the U.S. economy over the last 13 months. And so I think that within the mid-cap space, you have a much broader opportunity set to really participate in an expanding growth economy in a way that is really kind of more indicative of what's happening in the true kind of cyclical sectors of the market. So as you kind of see a pro-cyclical recovery that's on the heels of $5+ trillion of stimulus, the mid-cap space is really in the best position to participate in that growth going forward.
The bottom line, the US is home to a lot of dynamic companies, and it's a market where investors need a long-term allocation, and one of the easiest ways for UK investors to access the US stock market is through investment funds. Fund Caliber currently rates 13 US funds to get your research started, from equity income to smaller companies or technology. There's something for everyone. For more information on investing in US equities or any of the funds mentioned in this video, please visit fundcaliber.com, and don't forget to subscribe below for more weekly videos.